Good evening, guys. You can see time is around 10:30. Let's look into today's Nifty 50 as well as Bank Nifty trade analysis. And today is Nifty 50 expiry as well, since tomorrow is in holiday. And let's look into Nifty 50 expiry later. But let's look into Bank Nifty, guys. And if you look at a daily time frame analysis in Bank Nifty, I would like to show you. You can see the market hugely gapped down, but kind of showed some kind of bullish sentiment over here. And the market on the next day even showed some kind of bullish sentiment here. You can see the low of this candle to the high of this candle. You can see price rejecting from 0.38 level over here. You can see this kind of rejection rates. The 0.38 level clearly signifying some sort of bullishness, or you can expect some kind of demand. But here the price took support from 200 moving average and continued further bullish. And in a 5-minute time frame, you can see the 0.38 level here, which I have marked you earlier. On today's on 9th of April, you can see the market taking support from here and continuing further bullish momentum. And if you look at a 5-minute time frame also, you can see here there is 200 moving average and the market 5-minute 200 moving average over here. So let's look into a 1-minute time frame and see. You can see clearly in a 1 minute as well as in a 5-minute time frame, the 200 moving average acting as a resistance. And this is the weekly VWAP level, guys. This is the 0.38 level. The red color is the 21. The gray color is the 9 moving average, and here this is the 200 moving average. And you can see the market actually gapped down, showing some kind of bearish sentiment. And you can see the market clearly rejecting price from 9 moving average here. You can see this kind of rejection and price trading below the mid of the first candle as well as the 5-minute zone, as well as this is the pivot levels, guys. You can see this is the pivot level, the day pivot levels. So let's take this out. You can see this is the pivot level. So you could have easily entered short position somewhere here, keeping your stop loss just above this 200 moving average, or this moving, you can go target all the way towards the downside. The first target is where the market clearly broke structure low. You can see clearly the market actually broke this structure low. Consider this to be a clear break of structure. So you could have easily entered, and after the market facing rejection from these levels, and you could have easily targeted all the way towards the downside. But sometimes, usually, if you consider this swing momentum is the high of this candle to the common point within this, you can see price taking support from 0.5 as well as the 0.6 level here. This is the 0.5 as well as the 0.6 level. Usually, guys, what I'm saying is once the market clearly broke the structure low and market created an order block level here, usually the market again retraces to the day VWAP level or the 9 as well as the 21 moving average and continue further selling towards the downside. You can see after the clear break of structure, even the market broke this low also, and even the market broke the first candle's low, and the market would retrace to the 0.5 levels and continue further selling towards the downside. This is usually what we expect, guys, and even breaking this low. But you can see what happened is that the market here clearly broke the structure low, retraced to 50 levels or the VWAP level, as well as the 9 as well as the 20 moving average, but rejected price from these levels, guys. This is 0.5 as well as the 0.6 level, where price rejected from these levels and clearly broke structure towards the upside, forming a chalk over here. You can see clear chalk formation over here, changing the momentum from being bearish to bullish, guys. This is a clear chalk formation. Here the market sentiment was bearish, guys, but market took support from 0.5 as well as the 0.6 levels, where the market swept this low but closed above these ranges and above the 0.5 as well as the 0.6 levels, and even formed a chalk formation. But here the market failed to cross the 200 moving average in a 5-minute time frame, or you can consider the 1-minute time frame, or if you consider the 15 minutes also. If you see 15 minutes, definitely the market is here. So in a 5-minute and 1-minute time frame, the price was not able to cross the 200 moving average here. And you can see the market faced resistance over here and price continuation towards the downside. But here you can see clearly the market of this swing momentum over here failed to close below this low. But definitely this swing closed below this low, guys. But if you consider this order block levels, the market failed to make an higher high here. But definitely you can consider this impulsive momentum, which actually broke this low with a huge momentum, guys. You can consider this to be a clear break of structure. And if you try to plot the order block level, the last up candle before the down, you can consider this to be a 1-minute order block. You can see price rejecting from these levels and continuation of price towards the downside. So in case if you try to plot the Fib extinction levels, guys, the common point within this to the common point within this to the common point within this, you could have targeted the 100% move here. This is the 100% move where you could have easily targeted, and or else you could have targeted all the way to 1.68 level. This is where you could have targeted, guys. Short position somewhere here. keeping your stop loss just above the day VWAP level or the order block level, or you could have targeted all the way, or in case if you could have holded on to the price. And if you consider this swing momentum, guys, the common point within this to the common point within this, you can see price rejecting from 0.38 level over here. This is a clear price rejecting from 0.38 level here. You can see, guys, right? There is a rejection of price from 0.38 level, as well as you can see clearly there is some sort of supply over here. The last up move before the market actually broke this structure. You can consider this supply over here, where the market showing some kind of bearishness, and you could have either placed the anchor gap level here. Once if this level has been broken, you could have entered short position and targeted all the way towards this downside. Or you could have drawn the fib levels here, the low to high of this candle, and you could have targeted the 1.68 level here. You can see the market came all the way here, guys. This is how you could have easily target, even taking short position somewhere here after the market trying to break, keeping your stop loss just above that candle and targeting all the way to 1.68 level. And after this kind of huge bearish momentum, you could have tried your stop loss to this candle. Once if this candle is been broken towards the upside, you could have exited, because you can see this is the last sell-off candles, guys. So usually during this last sell-off candles, you can expect some kind of reversal momentum. But here you can see the market clearly reversed and even closed above this level also, clearly forming a chalk over here. Definitely, once if you could have easily seen this break of this level, guys, break of this 0.5 levels over here, you could have easily entered long position, keeping your stop loss just above below this candle and targeting all the way towards the swing high or the VWAP level. This is where you could have exited. For this to enter this, let me show you a confluence where you could have placing the anchor VWAP level of the swing low. You can see price rejecting from here, as well as in case if you could have lost, you could have lost just the stop loss here, guys, like one candle of stop loss. You can see clearly the market taking this support over here, guys. You can consider this last swing momentum, which actually broke the structure low, guys. You can see clearly market showing bullish sentiment, but this is the final sell-off candles, guys. Since the market is overextended towards the downside, you can expect some kind of bullish momentum. And so you can see this bullish engulfing pattern over here, as well as the price is trading above the 50% of this bullish engulfing candle. You can see this price is trading above the 50% of this bullish engulfing candle over here, clearly showing some sort of demand. And in case if you try to plot anchor way up levels here also, you can see price is taking support from these levels, rejection of price from these levels, and continuation of price towards the upside. This is how you could have easily taken long position. You can see rejection of price. And once if this level has been broken towards the upside, you can see clearly the market closed above this level and rejection of price at the lower levels. You could have easily entered long position here also. But as of now, you could have easily entered here, guys, keeping your stop loss just below this candle and targeted all the way to the day VWAP level. This is where you could have easily targeted. And you can see this kind of rejection, the anchor way up level here, which faced resistance over here. But here you can see the market is taking support over here, and the market is forming some sort of support. And if you consider the common point between this to the common point between this, you can see price retracing all the way to 550 levels over here. This is the 550 level, guys. And what you can see here is that the price is taking support from 550 levels, and the market is continuing further bullish momentum. And with confluence is this, the anchor way up levels over here, clearly signifying some sort of bullishness. So you could have easily taken long position here, keeping your stop loss just below that candle and targeting all the way. Initially, you could target this swing high, or you can consider the order block level is. You can see the last up candle over here, which actually broke structure towards the downside. You could have easily targeted all the way to this order block level. And you can see clearly the market here broke structure towards the upside. It is a clear break of structure. And if you consider this swing momentum over here, the low of this candle to the high of this candle, you can see again the price rejecting from 550 levels over here, clearly showing some sort of demand over here. This is the 550, it's showing some sort of demand. And in case if you try to plot the fib extinction levels, the common point within this to the common point within this to the common point within this, you could have targeted all the way to 100% move, but market didn't come all the way to this 100% move. You can see market came and rejected price from this order block level. You could have exited your position somewhere here, or after seeing this kind of huge bearish candle is where you could have exited. And you can see the market is trading in a sideways manner where there is no clear price action being formed. I hope you're understanding, guys, what I'm saying. Definitely this momentum, guys, changed the market sentiment from being bearish to bullish. And what you could have seen here is that too, after this kind of huge momentum, guys, you could have plotted the low to high of this candle and see in case if market taking support from the 0.38 level or the 550 level, In case if the market even breaks the 0.38 level as well as the 50 levels and rejecting price from 200 moving average and clearly closing below this low, this momentum is just a manipulation, guys. This is to manipulate buyers to enter the market because a lot of sellers might have entered here. And to target all those sellers, the market has to move and hit the stop loss of all the sellers. And to initiate buyers to enter the market, only with this kind of manipulation, you can find a lot of liquidity. So this was just to manipulate buyers as well as sellers to enter the market and exit their positions. And you can see after this kind of momentum, the market again reversed towards the original direction and market further continued selling towards the downside. You can see after this, the market went all the way to 0.38 level over here, the initial support, the previous day's support, guys, you can see, and the market continuing further selling towards the upside. And you can see you could have either entered the consolidation phase here, guys. You can see this is consolidation, price consolidating above the day VWAP level, the anchor VWAP level, as well as the 9 and 21 moving average. This kind of consolidation, you could have made a quick scalp over here as well. And you could have waited for proper retracement to 0.5 levels. And you can see the price rejecting from these levels, showing some kind of bullish sentiment. And you could have kept your stop loss just below that candle and targeting all the way towards the upside. That is another trade setup where you could have taken. And here also you can see since the market was overextended towards the downside, you could expect some kind of momentum towards the upside. So you could look for some kind of momentum, guys. You can see the last sell-off candle, which showing a huge momentum towards the downside. With seeing this candle, a lot of sellers might have entered the market, expecting the market to go further selling towards the downside. To target all those sellers, you can see this kind of manipulation. This kind of momentum candle, guys, which I have mentioned, I have many times explained to you in my previous videos also, in even towards the upside as well as towards the downside, when the market is overextended, it shows some kind of last sell-off candles like this, a huge bearish candles. This kind of candles, though, I have explained you this kind of manipulation. So it's very careful that to trial your stop loss in case if you're taking short positions, or trial your stop loss all the way to this last sell-off candle. Or else you could have waited for the retracement and looking for reversal, guys. You can see how beautifully the market here formed a bullish engulfing pattern and price trading about the fib of that bullish engulfing pattern. So you could have even continued further buying pressure over here. This is how you could have easily traded, guys. I hope you're understanding how you could have traded. And coming to Nifty 50, you can see Nifty 50, guys. You can see what you could have traded here. There is no price action only, guys. You can see clearly. You can't even take such kind of trades, guys. You can see clearly after this kind of huge gap down, guys, the market here showed kind of very sentiment both in Nifty as well as Bank Nifty. So this kind of rejection from 9 moving average, clearly you could have expected some kind of bearish momentum and keeping your stop loss, and you could have clearly targeted this low, or you can consider this low. You see that clearly the market broke this structure over here, clearly forming a clear break of structure. So what you could have expected is the market to reverse to the day VWAP level or the 21 moving average or the 50 levels over here, and continuation of price towards the downside. So you consider this swing momentum, guys, the high of this candle to the low of this candle. You can see price rejecting from 50 levels over here. So in case if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you can see again the price taking support from 0.5 as well as the 0.6 level, clearly showing some sort of demand at these zones. You can see this kind of demand over here, guys, and the price rejecting from these levels, clearly signifying some sort of bullishness. In case if the market sentiment would have been bearish, the market would have clearly broke this structure low or even broke this day lows and the first candles low, guys. Even though the market didn't break this low, you could have expected this low. So the market clearly broke this low. So you can consider this to be a clear break of structure. And the market here could have retraced to 50 levels or the anchor VWAP level, the day VWAP level, or the 21 moving average rejection, or the mid of the first candle, or you can consider the 5-minute zone. And clearly the market would have broke this low, guys, in case if the market sentiment would have been bullish, bearish. But here you can see the market here facing rejection towards the on side, and clearly the market broke this structure over here, changing the market sentiment from being bearish to bullish. So what you could have seen is to look for a long setup, guys. But if you consider the low to high of this candle, you can see the market neither took support from 0.38 level nor the 50 level. Instead, the market clearly broke this structure towards the downside and even broke this low also, guys. You can see the market clearly closed below this low. Even though the market might have taken support, if you consider this low to this common point between this, the market came all the way to this demand zone over here, guys. You can consider the last down candle to be some sort of demand zone here. You can consider this to be a 1-minute order block. So the market came, mitigated this order block, but failed to make an higher high here. But definitely the market broke here. This is a clear breakout structure. But instead, after this breakout structure, guys, the market clearly closed below this low, or you can consider even this low also, guys. You can see the market even broke this swing low also here. market didn't break this actually, the swing low. You can consider this low, guys, and you can consider this to be a clear chalk formation over here. You can see this clear chalk formation where the market, after this kind of break of structure, where the market failed to make an higher high here, instead make, this is internal break of structure, guys. But what we need to expect is to break an external break of structure. This is external liquidity, but market failed to grab this external liquidity or even break of structure of this external liquidity, but instead the market broke towards the downside. This is external chalk formation. After creating this kind of impulsive bearish momentum, you could have looked for short setups here, and definitely you could have traded short only, guys. So you can consider the last up candle. You can see this is the last up candle, guys. So you can see the market came mitigated this zone over here and continued further selling towards the downside. So what you could have done is to target all the way to this zone over here. So after this kind of bearishness, guys, or you can see this kind of momentum here, there was no clear price action, but definitely here the market sentiment was bearish only. So what you could have done is to enter somewhere, could have waited for retracement, and after this kind of rejections, you could have entered keeping your stop loss just above that candle and targeting all the way to this liquidity over here. But this is not a good setup, guys. Neither you could have traded any of these zones, nor you could have traded even this also. You can see there is no clear price action. But definitely the market here swept this low but closed above this zone, clearly showing some sort of demand. And you could have looked for long trades only, guys, here instead of short trades, because you can see this kind of rejection of price from lower levels and some kind of demand over here. Since the market is overextended towards the downside, you could have expected some kind of reversal towards the upside. In case if you might have captured this momentum, guys, towards the long side, in comparison to Nifty, Bank Nifty, you could have easily traded all the way to this zone over here. So this was a very good trade setup where you could have easily taken at around, you can see the last sell-off candle at 11:11. You can see here also the market at 11:11 showed a huge bearish candle. After that, the market found some kind of bullish sentiment and continuation of price towards the upside. Same happened in Nifty 50 also. You could have easily entered long position somewhere here in comparison with Bank Nifty, keeping your stop loss just below that candle itself and targeting all the way towards the upside. So this is where you could have easily targeted, guys, all the way to 200 moving average or the day VWAP level. So you can see rejection of price from day VWAP level, and you can see there is order block level also here. You can see this is the order block level where market actually broke this order block level towards the upside. Again, the market retraced, consolidated above the 9 as well as the 21 moving average, clearly broke structure towards the upside. You can see clear break of structure towards the upside. And if you consider this swing momentum over here, you can consider the low, the common point between this to the common point between this. You can consider the 50 levels over here. This is the clear 50 level where the market trying to take support from this low. And in case if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted all the way to 100% move here. You can see the market came, rejected price from this 100% move. So entering long position somewhere here is where price rejecting from day VWAP level, clearly significant. You can see this kind of resistance over here where the market continued and even broke this low, and the market immediately formed a chalk formation and again retraced to the day VWAP level where the initial resistance acted as support over here. So you could have easily taken long position targeting all the way to 100% move. So I hope you understand. And after this, you can see the market rejected and you can see this kind of momentum, guys. Definitely no rational trader would have taken positions over here and could have made any profit, but definitely you can see the rejection of price from 200 moving average. You could have made a short scalp here, but you can see this kind of support over here, resistance over here. Whenever you can see the VWAP level as well as 200 moving average fighting against each other to break out on which direction, definitely 200 moving average is more powerful when compared to a day VWAP level, guys. So you can expect a rejection of price from 200 moving average and break of structure towards the day anchor day VWAP level. So 200 moving average has more weight compared to VWAP level, guys. And you can see you could have traded in Nifty 50. Definitely there is no good setup here, guys, but as of the price action which the market behaved, and if you decode the trade over here, this is what it is. So you could have just managed to trade in this way itself, guys. I hope you're understanding what I'm saying. In case if you find my videos helpful, guys, share with your friends and family, and please keep supporting our channel. And if you want to keep in touch with me, Instagram is the way to go, guys. You can directly message me there. I've handled my Instagram on my profile. And please leave a comment below, guys. So I would like to see what's your opinion on how I trade. In case if you want to correct me or suggest me anything, you can definitely comment me below. Thank you, guys.